Good morning, I'm David Carspel and this is Saxo Bank Market Call. Today is the 3rd of March. On Friday we saw the release of a couple of US figures, quite disappointing. The US price deflator and PCE deflator were both higher than expected at 3.7% versus 3.5% expected for both of them. Then we saw the Chicago PMI out at 44.5 versus 49.5 expected. Very low, much lower than expected, really looking ugly. And with the US University of Michigan confidence out at 70.8 versus 70 expected, also at a very low level, but as expected, this certainly looks very weak. And the US dollar was continuing to weaken. Same did with the carry trades. The US dollar and also carry trades look a bit oversold, but might actually continue because this looks like a special situation. This looks like the negative sentiment has really been getting a grip in the markets. So despite technical indicators pointing to oversoldness, we might actually see this continuing for another day or two. Stocks weakening again, with Asian stocks down by 3 to 5%. S&P futures trading a tad lower still from Friday's close, and fixed income is pushing towards new highs, and apparently no inflation fears here, or they are just calculating with lower interest rates. Commodities are going higher on dollar weakness. Gold is soon at the magical $1,000 per ounce mark. This would be a major symbolic event. It could actually happen today, only $16 away. And silver is breaking the much talked about $20 per ounce level. We suggest that it might continue still higher. And crude oil is trading above $100 per barrel still. So what's going on in markets? We're seeing a substantial and broad losses on Friday in European and American stocks, and the theme of carry trade unwinding and risk aversion is still having a grip in the markets. Nikkei is down more than 4% this morning, and especially led by losses in banks and automakers, and deepening concerns of credit losses and fears of a US recession still. Major world currencies have taken the brunt of East monetary policy adjustments, and we're seeing precious metals going a lot higher. We're seeing the precious metals have been returning 6 to 20 times as much as US Treasuries so far this year, and we're seeing a lot of problems down the road for municipal bonds. US states and local governments may extend the slump in municipal treasuries as they look to replace $166 billion worth of auction rate securities with rates as high as $20. 20%. So this looks like it might be the next thing hitting the U.S. Municipal bonds with very high rates. Economic calendar today, we have the 10 o'clock GMT, we have the Eurozone PMI manufacturing expected at 52.3. We have the 10:30 UK PMI manufacturing as well, expected at 51. And then Eurozone CPI estimate expected at 3.2%, that's at 11 o'clock GMT. At 16 o'clock GMT, we have the ISM manufacturing and prices paid for the US expected at 48.4 and 73.5 respectively. Also at 16 o'clock GMT, the US construction spending expected at minus 0.7%. In the next couple of days, we have the Aussie retail sales and RBA cash target. They're expected to, at least some analysts expecting to hike rates. In Australia, that's tomorrow. And in Switzerland, CPI and GDP. In the Eurozone, GDP and PPI. And also tomorrow is a Bank of Canada rate decision. Then also ABC consumer confidence, and on Wednesday we have the Aussie GDP, we have the US non-farm productivity, unit labor cost, factory orders, and ISM non-manufacturing. The latest one is quite important. Also the Fed's base book would be important for the rate outlook in the US. We also have the Reserve Bank of New Zealand official cash rate. An FX trade today is euro-dollar. We suspect that it will go higher and test the trend line resistance since the beginning of mid-2006. and this will probably happen just a figure higher or so. So we buy euro-dollar at the break of the highs at 152.40 bid and targeting 153, and stop offer at 152.10. On equities, still we suspect that they might continue lower, especially in the European session. Therefore we also sell Barclays Bank, of course, and that should be doing not so well in this kind of environment, with still a lot of risk aversion and fears. So selling Barclays, we are entering in the range of 470 to 480, targeting 400, and keeping a stop loss above 490. On futures, we have an index strategy here. We look for S&P 500 future to trade below 1345, and focus is at the January lows. So sell ESH8 is a futures contract around 1345 area, and stop above 1375, targeting 1255. So that will be, of course, a slightly longer term trade, not an intraday trade, but we suspect that this will be going on, especially if we see carry trade unwinding continue and also dollar weakness continuing. Otherwise, we are positive on bunds and US 10 years, and we're also positive on commodities still. That is it for today, and thank you for joining me here on Saxo Bank Market Call.